Hello. In this video, we will be talking about the inventory cost flow, specifically the specific identification method. Let's talk about how inventory and cost flow of inventory. As you know, inventory, to calculate the cost of goods sold, you're going to take your beginning inventory plus your net purchases, gives you the merchandise available for sale, or goods, or it's also called goods available for sale. And that you take that number minus your ending inventory gives you your cost of goods sold. So let's just say, okay, it's your beginning inventory plus your net purchases gives you a subtotal of cost of goods available for sale, right? It's a mouthful, minus your ending inventory gives you your cost of goods sold. So, but the question is, how do we allocate the dollar value to the ending inventory versus the cost of goods sold? And there are different methods of doing that, which is what the next few videos are going to go through. The first method is the specific identification method, and what it does is it tracks each unit that you sell, the company sells. It knows specifically what the company purchased it for, and then they can allocate that cost to that specific item. Not many companies use this method. It's really when companies are selling very unique, expensive, and low sales volume, because if you have a lot of sales, it would be very difficult and costly to maintain this kind of inventory costing system. So let's just go through an example, and I think it'll make more sense. And so this is for the specific identification method. Here's a biking company. They sell bicycles, and it gives you its activities for the month of August, beginning with the beginning inventory, and these are the purchases that they have during the month and the sales that they have, the number of units that they sold during the month, and this is basically their ending inventory after each purchase or sale. So we can see on August 1st, they purchased 10 units and $91. So their beginning inventory is $910. On August 3rd, they purchased 15 units at $106, which equals $15.90. Now they have in their ending inventory, they start with 10 plus 20 plus 15 equals 25. Then on August 14th, they sold 20 units, and the 20 units that they sold, they sold each of them for $130. Now, for this exercise, we're trying to figure out the cost of goods sold and the ending inventory amount. So the amount that they actually sold it for, no matter when, for this exercise is irrelevant. We just need to know that they sold 20 units. And so now they have 5 units left. And then on August 17th and 18th, they made additional purchases of more bikes. And each day, each one of those purchases on different days, they paid a different amount for those bikes. But now they have another 30 units in their inventory. So now they have a total inventory of 35 units. And then at the end of the month, they sold 23 units. So now they only have 12 units left. So this is just our facts. Now let's just see how we're going to actually calculate it, right? So this is our same facts, but this is the date. Goods available for sales is our beginning inventory plus our net purchases. Okay, that's what this is. So it tells us our August 1st, our beginning inventory is $910. So I'm just going to put this here, $910 of beginning inventory. I'm just going to take here these purchases right here that they made throughout the month, and that's $5,080. So I'm just going to go up here. Oh, yeah, $5,080. So our total merchandise or cost of goods available for sale is $5,990. I think that's right. Yes, but that's right here. What we're trying to do with all these exercises is of this 500, we have $5,990 of merchandise available for sale, some of which we'll sell and some of which we won't. And you have to figure out how you're going to split it between here and here. How much is going to go into your ending inventory? It's going to stay in your ending inventory dollar-wise, what dollar amount, and that will determine what dollar amount will be your cost of goods sold. And there's different methods to allocate that, which is what all these videos, these next few videos are going to be. So this is the specific identification method of how we're going to allocate this $59.90 between ending inventory and cost of goods sold. Well, the specific identification is just like it sounds. We specifically identify the cost of each item that we sell to the amount that we paid for it. So on August 1st, it tells us that, let's see what our facts were. On August 1st and 3rd, we purchased 10 and 15 units, and then on August 14th, we made our first sale of 20 units. So on August 1st and 3rd, we made purchases of 10 and 15 units. And we're going to assume that we sold 10 bikes. All these 10 bikes, we sold all of those. So we allocate them a $91 cost of goods sold. And we're going to assume that we sold all 15 of those specific bikes that we acquired on August 3rd. We're going to assume that we sold all of those. And so we're going to allocate them $106 price, cost of goods sold, I should say. And now we're going to say of this 20 bikes that we purchased on August 17th, we didn't sell all of them. We only sold 15 of them. And that's just something the problem made up. You can't see, I deleted some of the slides, but that's what the problem said. The problem says we, on August 7th, they sold 15 bikes that were purchased, that were part of the August 17th purchase, like batch that they purchased. So they sold 15 of these bikes at $115 because that's what we paid. They didn't sell at $115. They allocated a cost of $115 because it's specifically those bikes, which means we have 5 bikes left from this batch that are $115, and that is remaining on our ending inventory. And then the problem tells us that 3 of the bikes were sold from the August 28th batch, which means we're going to allocate a cost of $119 to them. So that leaves us with 7 bikes left in our ending inventory at $119. So at the end of the day, this is our cost of goods sold is $4,582, and the amount we have left in our ending inventory is the $575 plus $833 equals $1,408. And so in this situation, the 1408 here, this ends up being 1408, and our cost of 4582. Our cost of goods sold is 4582. That's how we were able to allocate this 1590 between our ending inventory and our cost of goods sold. That is specific identification.